I think these numbers can sometimes mislead. Just to as a different company a decade ago, with a different level of dilution, there was a different raise. I don't think it's really relevant for the purposes of today's discussion. We are looking to raise just under 5,000 crores now, and that will be used largely to deleverage. We are focused on becoming a very low debt, zero debt development company over the next 3 years, and have all of our debt supported by our rental assets. And really, the IPO would help us to take a step in that direction.
You have been on record, in fact, that you are willing and you want to take Lodha to being a zero debt company and improve your debt equity ratio. What is the debt currently on your balance sheets, and how much are you looking to retire from the proceeds of the IPO?
So we'll retire about 4,500 crores of debt after the IPO. After the IPO, we'll have a debt of about 13,500 crores, which is a debt equity of about 1.6. That's where we'll be.
Just give me a historical sense of what kind of revenues and PAT have you been generating?
FY18 we had a PAT of just under 800 crores, and that was a PAT growth of over 30%. And we on the collection side, we collected over 8,500 crores from our customers. We had revenues of over 9,000 crores. Most importantly, we delivered over 11,000 units in FY18, which is not only by far the largest delivery in India, but actually is the largest delivery of multi-storied homes and offices anywhere in the world outside China.
I was just going to come to that, in fact. Is that a conscious strategy to move away from premium real estate into affordable housing, with the government's push as well being an added kicker?
We as a company started doing mid-income affordable housing way back in 2009-10. So we've almost been doing it for 8-9 years now, way before it became the buzzword or there were government incentives. The reason we started doing it is in every industry there is a player who understands what it takes to serve the middle class, and that player takes an outsized size of the growth. So in automobiles you have Maruti. In different industries you have one player which is able to understand what the middle class wants, and we believe that we are that player in real estate. Last year almost 50% of our sales came from our mid-income affordable housing portfolio, and that's spread over multiple locations: Pallava, Amara in Thane, Upper Thane, Mira Road, and so on. And we have a replicable model of doing mid-income mixed-use large-scale developments, which we think is very unique, and nobody else in the country has figured that out. And we put the whole ecosystem together. We get in the education, we get in the retail, we get in the sports, we get in the governance, the infrastructure, and it truly creates a vibrant community with that we do.
Great. So if I were to ask you what your revenue pie is looking like as per your last reported financial numbers or calculated numbers, how much of it was rental income as a percentage of sales, how much was affordable, how much was luxury?
For us, affordable housing are homes which are between 35-40 lakhs up to maybe 75-80-90 lakhs. It's not anything above a crore. And that part of the business last year, like I said, contributed just under 50% of sales in our development business, and the balance came from the mid-income and the premium housing. And then our rental business is growing. This year we'll have an annualized rental flow of about 200 crores, and that is intended to grow significantly. We have almost 10 million square feet of rental assets under development.
Okay. What is the status on luxury projects?
Equally, within real estate, you have premium housing, you have mid-income or affordable housing, you have offices, you have retail, you have logistics. And except for premium housing, all the other categories are doing exceptionally well. Our affordable housing mid-income business is going great guns. Our office business is doing really well. Our retail business is doing really well. So
but is luxury that sore thumb?
So the premium housing business is clearly not performing at par with the others. There has been oversupply in that market, and prices have corrected. We think prices have bottomed out and are now starting to see that demand is getting stronger. But clearly, other than premium housing is the slowest performing part of the real estate market, but everything else is doing exceptionally well.
So is your focus going to be now more affordable housing, or is it going to be more premium, as you call it?
No, absolutely affordable housing. We have huge amount of supply of affordable housing. We own enough land that we can build 4 lakh affordable housing homes on the land we already own. So affordable housing is going to become a more and more bigger part of our business.
How much unsold inventory are you sitting on for your premium segment?
We'll have about 3 years worth of supply. So if you look at 1 year of sales, we have 3 years of supply.
quantify that in square feet?
So quantifying that in square feet will be about 3 million square feet. Yes.
And you hope to get.
So like I said, we
Sell it in the
sold
next 3
about
years.
1 million square feet last year. It's about 3 years.
Okay. Tell me about your ongoing projects, and I understand it's a large number, 37 of them.
Like I said, we have been India's largest real estate developer for several years. We are a very decentralized organization. We have very good talent, and we divide our business into regions, and each region is run by a CEO who has all the decision making powers, and that really helps our business be much bigger
So let's
than
go
anybody
through
else.
each project which is currently underway. Out of this 37, how
Sure.
many are affordable? Which are the premium segments that you currently have work ongoing as of now?
So I think 37 will bore you and your viewers.
No,
so
no, go for it. We have all the time.
I'll focus on the 6 big ones which make
Sure.
up about 80% of our business. We have Pallava, which is a new city development. It's located on the outskirts of Navi Mumbai. It's
Yeah.
about an hour's drive from South Mumbai and about 15 minutes from where the Reliance Group headquarters is, about 20-25 minutes from Airoli, and 25 minutes from where the new airport is coming up in Navi Mumbai. That's a mid-income mixed-use development where we have a large, huge population already staying. More than 1 lakh people are already staying. More than 30,000 homes have been sold. More than 23,000 homes have been handed over. We have everything, mall, school, etc., etc., everything in place. And it really is a place where anybody who comes from abroad says, wow, if this can happen in India, then India has great potential. Now the new workspaces have started there. The first office building is ready. HDFC Bank, which is India's leading financial services organization, is the anchor tenant, and we expect that with all the big growth in financial services in this country, if the front office is in Mumbai, the mid office is in Mumbai, why should they go for back office anywhere else when they can get high
They're clearly
quality
sensing opportunity there.
high quality cheap office spaces around Pallava. A lot of infrastructure is coming up in Pallava. The new metro is expected to come
Could
over there.
Pallava be what Gurgaon was to DLF for you?
I think Pallava will be to Mumbai what Gurgaon was to Delhi. It provided an opportunity for better living, but just that Pallava is better planned, has better governance, better infrastructure. So we think it will be a better version. Gurgaon was great for its times. It's just that we are following, so we can learn and improve upon it. So that's
So no waterlogging?
We hope. Well, we've seen many monsoons and we've never had it. So that's one project. That's about 20% of our sales. Then we have Upper Thane, which is located on the outskirts of Thane. This is again one more large affordable housing project. It will be eventually have about 20,000 homes there. Again, similarly mixed used, high quality, mid income housing. That's about 10% of our sales. Then you have Amara, which is located in Thane, and a third of our large affordable housing, mid-income housing projects. This is a project which has broken all records. We delivered 8 months ahead of schedule in this country, where people talk, how many years behind are you? We delivered ahead of schedule, and it's really something changed the perception of what good mid-income housing can be. That's another 17-18% of our sales. So together these three and a couple of smaller affordable housing projects come to about 50% of our sales. So those are three big ones in the affordable. Then on the premium side, we have New Cuff Parade, which is located in Wadala, which is sort of at the cusp of where the island city starts in Mumbai. It's mixed use again, residential and office space and retail. The first office building is ready, and as you're aware, there is a new road being built from BKC to Sion, which will make the travel that bridge is almost ready, is imminently going to open, which will make the travel distance from BKC to New Cuff Parade about 7 to 10 minutes, which will make it very accessible. Also New Cuff Parade is accessible from the Eastern Freeway, so from South Mumbai you get there very quickly. So that's the fourth large project. Then we have the Park. This is a land in central Mumbai. It's 6 large towers, including the Trump Tower, and 4 of those towers are now approaching completion. They'll all be completed in this fiscal year. And then we have the World Towers, which is also located in central Mumbai. So those are the 2 other premium housing. So these are our 6 projects, 3 large mid-income housing projects and 3 premium projects, which are sort of all approaching completion.
There are 2 international projects also, right, in UK. How
Yes.
are they doing? Because the talk was that you've burnt your fingers with those 2 projects.
So the 2 projects have done reasonably well. We complete one this year and one next year. Okay. We will make a reasonable return there, under 20% IRR. So we're definitely not losing money.
Sure.
But it's not necessarily the highest return we've made on anything.
Okay, great. Just one point, and Wanted to understand what are the subsidiaries currently in the company, and would it be when you list, would Lodha then be a combined, consolidated entity which would have your subsidiaries as well?
Yeah, the listed entity controls all our business.
Okay, so tell me a little bit more about them and the financial health.
No, the subsidiaries are essentially in real estate. We have for individual projects, you sometimes make separate standalone companies.
Okay.
So that's really, so it's not really a subsidiary in the typical sense of the way where you have a different business
Okay.
happening. So they are all consolidated into the balance sheet. So if you look at the consolidated balance sheet of the company which is intended to be listed, you get the full financial picture.
Is it true that the National Housing Board also cancelled your certificate of registration which was granted to Lodha Housing Finance Private Limited?
No, so Lodha Housing Finance Private Limited is not a company, Lodha Group. We read that newspaper report, it's inaccurate. It's
Okay.
nothing to do with Lodha developers.
But it is a group company.
No, it's not a
nonetheless.
group company.
It's not a group company. Eventually, Abhishek, it's going to be all about how you price your IPO. You know, we can sit here and discuss the
Absolutely.
dynamics of the company and industry or whatever have
Absolutely.
you. As a promoter, how is it that you value your own company? Because there's no bigger insider than you. How would you like to price the per share value for Lodha?
See, the way way I think about it is that we're much larger than most other peers in the marketplace. So you have to look at the different parts of our business and do a comparable there. So you do premium housing, then you compare with 2 or 3 of the big players who are in premium housing. You know most of the premium housing players well. Affordable housing, there are a few smaller listed players. You compare with that. Office rental income, you compare with that, and then you do an aggregate of those different valuations to come to an estimate. We believe, and we have been advised by what I would say are some of the best, most highly respected names in the financial services industry. We're going to leave a lot of value on the table. This is only our first capital raise. We're diluting 16% or so. So we have no hurry to grab everything. We're going to leave a lot on the table. We saw a few weeks ago a very, very successful IPO, and that's an inspiration for us to follow.